Interest rates for the first time since 2008 are above 6% official today. The average interest rate was at about 6.13%, and that's 3% above where they were just 6 months ago, so like in January. So I really think I want to talk about this market right now, but I don't think any buyer should be in a rush to buy. Nobody should be in a rush to buy. The markets are very, very volatile right now. So you need to be watching the market. I'm going to tell you what I think, what's going on now, and why the stock market did terrible today based on the CPI numbers from Friday and what they're anticipating the Fed is going to do on Wednesday. So let's talk about it. I'm Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. Now, for the first time, like I said, since 2008, interest rates have gone above 6%, and they rose very quickly just today. The CPI report, which is the Consumer Price Index report, came out on Friday, and inflation rose 8.6%, which is higher than what was expected. And many are signaling, a lot of economists are saying that the Fed should raise rates about a quarter, like 75 basis points, as opposed to 50 basis points, because like instead of a half of a percent, 3/4 of a percent. And the Fed has been saying already that he was going to raise rates a half of a percent, okay, 50 basis points. But because the consumer price index was much higher, like inflation is much higher than everybody thought it was going to be, then they're saying he has to get more aggressive. And that's why the markets today are very all over the place. All markets are down, down, down. So, and mortgage rates went up, signaling with this higher, that might be a higher than anticipated rate hike. So my take on the market right now for first time home buyers is just pay attention, because there's a lot of things that could happen. There's a lot of things that have been happening over the last couple of weeks that you need to pay attention to, and you just want to make sure that you're not jumping in. I'm not saying that home ownership is still a good thing, but right now it's very volatile, and so we don't know that how is the market, how are these sellers going to react to this 6%? How long will it be 6%? Because before, when rates went up to the higher fives, they came back down because of the market, people saying it's a recession, try to keep more people in the market. So we don't know, is it going to stay at 6%? Will it come back down? And we also don't know what the reaction is going to be, but we can kind of predict, because at 5%, people got out of the market. We're down about 50% in mortgage applications from last year. Month to month, we're 22% down with mortgage applications. So less people are applying for homes, so that demand is coming down. The only thing that the housing market has in its favor right now is supply. Supply is still low. So demand is coming down. Supply is coming up right now because it's seasonal. Big part of the supply is seasonal. People want to sell their house and people want to buy a house because this is a time when people move. They move in anticipation of the new school year typically. They move because things are more slow in the spring and the summer. So you do have that demand, that seasonal demand that's still out there, but a lot of people are backing out of the market because of these interest rates. So inventory has increased in some areas because a lot of agents are telling sellers this may be your last opportunity to get a higher price. So if this is your last opportunity to get a higher price, come fall, you have to get a lower price, right? So you want to, now I'm not saying interest rates will go back down. We don't know that yet. And that's why I want you to just take a pause and pay attention to inventory in your local market. Like you need to know, okay, under 3 months of inventory is considered to be a seller's market still. So you want to know how many months of inventory do you have in your current market. In Atlanta, for example, it's still like a month, month and a half in most areas. But if you start getting into the 3-month area, above 3, you maybe get into a normal market. And then 5 months, 6 months, it becomes a buyer's market. So you want to pay attention to inventory, because again, the main thing that is on the side of the housing market not going so low, right, or not having like a big decline is supply. most people with mortgages right now have a mortgage below 5%. And that's over 90% of homeowners have a mortgage below 5%. So the incentive for them to move is not to save money. The incentive for them to move would to spend more money, or perhaps take some money out of their house and move in with family or something like that. So it's not a big incentive for anybody to move right now. So supply may continue to be low, and that's something that will keep the housing market not into these high price reductions, but you may have an opportunity to get some discounts. Not sure how much it will go down in price, but you have to think the people that are out there that still have to sell at, these higher interest rates will be more willing to negotiate with you. There'll be less competition when you put in an offer, those sorts of things. And I don't think we'll know that until there's a rate hike scheduled in June, there's a rate hike scheduled in July. So like right now, until like all of these things figure themselves out, we won't know what that supply is going to look like. We're not going to know officially what that demand is going to look like. But if we're thinking about, okay, at 5%, a significant amount of people backed out. At 6%, they'll probably back out again because of the uncertainty. Let's talk about recession. A lot of economists now are saying it's not if there's going to be a recession, it's when and how bad will the recession be, or how deep will the recession be. So a lot of people have taken a pause on home ownership because they're looking at gas prices at home prices. Of course, they were already high, but now your gas is very high and your food is very high, and then you're saying, okay, now I have to pay even more for my house. So you have more people, just because everything is so much more expensive, backing out. So on the demand side, that all is in the play, where a lot of people now, okay, 6% is where everybody's maybe backing off to say, okay, I still have to pay, if I can, pay my rent. I don't want to take the unknown of buying this house at a more expensive cost, when I know I have to pay more for gas and energy and food. So all of those things are happening now. I'm going to do another video on Wednesday after the Fed makes their announcement, but I wanted to come in and just say at this point, for buyers, and I'm sure, put your questions in the comments. My take on the market at this point is there's no rush. And I have clients that want to buy that I'm working with. I don't take as many individual clients, but because I refer a lot of people out, I'm in communication with a lot of agents, and they're saying the market is slowing. The people that I am working with, that I do work on one-on-one, I told them today, you have to keep an eye on this interest rate. It still has to make sense for you to purchase a home right now. We have to look at the price, how much it's costing you, how much of your take-home pay is going toward that mortgage, if you're willing to live in that house for 5 to 7 years, if not longer, and do you have an emergency fund saved? And then you need to think about how stable, because I asked a poll question on my channel a couple of days ago about how many jobs do you have? Do you have one job? Do you have a job and a side hustle? Do you have 2 jobs? There are, right now, another thing that's going for the economy is employment. Most people are employed, so they have the money, but are you on the edge? So if you lost that one job, you may not be able to pay things as you were going to pay them, because some people, if they're not doing hiring freezes, some larger companies, they are saying they're going to lay off a small percentage of workers. So you don't want to get in a situation where your job is unstable and you're purchasing this home. So my guidance right now, at least, is for you to just pay attention to the market. Pay attention to the market in your local area. What is the interest rate? How much is this costing you? What's your loan estimate? Because a lot of people, especially builders right now, because they're nervous, if you go under contract with new construction, they're going to ask you for a high deposit typically, because they know the chances of interest rates going up, or you possibly backing out, maybe because of job loss, maybe because of the interest rate, that you may back out of this contract. So they're going to be looking for more earnest money, more deposits, and you don't want to lose that money. So everything that you do right now this summer needs to be looked at very, very carefully. You have to be able to afford the house. You have to be able to have money saved. This needs to be under your budget, and you have to be living in that house long term. Long term in real estate, you'll be fine. But if you're thinking I might move in 2 years or 3 years, hold off. Okay, so again, I'll have a new video out when the Fed makes their announcement. They usually make their announcement and they do a press conference. So I will do both, and we'll talk about it again then to see, okay, where are we at. But for right now, I think if you're in the market to buy, just start paying attention. I want you to be paying attention to the market, and you're mostly paying attention to inventory levels, and you're also paying attention to interest rates and where they're going. If you need new loan estimates, because again, from January till now, depending on the type of loan that you're taking out, it's like a $400 to $500 difference in the mortgage payment for the same price house. I hope this was helpful. Please like and subscribe to my channel for new videos every week.